Well, good morning, everyone. Thank you for joining us. We, as you know, are talking today about the coronavirus job retention scheme and the comparable scheme for self-employed workers as well. My name is Shilpen Savani. I'm a partner at Gunnar Cook. I am a dispute resolution specialist, but within that I have an employment specialism. I've been a litigator for I'd say about 22 years, I think, 23 years at last count. And I've been an employment lawyer and employment specialist for about 15 or so. And I'm looking forward to discussing these topics with you today.
Hi, everyone. I'm Paul Ryman. I'm an employment partner at Gunnar Cook. Most of my work involves providing employment law to businesses. So like many employment lawyers, I've spent the last month flat out helping clients to try and navigate the fallout from the coronavirus, and in particular this ever-changing furlough scheme. So I think hopefully now the scheme was up and running yesterday, we're getting close to hopefully the final version of the rules. But there are still some unanswered questions which we'll be looking at today. If I could just start by dealing with some etiquette points. If you wouldn't mind, could you please turn your videos off and also mute your microphones? And for questions, if we could ask if you could use the chat stream to put your questions down. Helen, who's moderating, will be able to collate those and can share those with Shilpen and I, so we can answer them. So, hope you enjoy the webinar. Shilpen.
Thanks, Paul. You cannot have missed the fact that there's been a lot of talk, there's been a lot of anticipation around this particular scheme. Some say the government has been quick to respond, some say the government has been slow to respond, but one way or the other, this has been done very much sort of on the hoof and under immense amount of pressure and time. What's interesting about the furlough scheme, which is the coronavirus job retention scheme, is finally, after all the anticipation, after all the talk, all the adjustments, and they've been coming in thick and fast, even until yesterday, is I think we've come to the moment of truth now, because the government portal, which is intended to be the solution and the only way to apply for this grant, opened yesterday. We're told that they can handle up to 450,000 applications an hour. There's certainly been no apocalyptic reports of major crashes or anything overnight, as far as I'm aware. And the government's promise thus far is that payments will start to flow within 6 working days of the applications being made. So we seem to have got off to a relatively stable start so far. But of course, much will depend on how this plays out. In terms of what we're looking to cover today, we are going to try and leave you with a practical, jargon-free introduction to how these government rescue packages will work for PAYE workers, that's mainly employees, and also non-PAYE workers who are mainly self-employed people and businesses. Paul, over to you.
Cool. So to start by looking at the objective of the scheme, I think first we need to caveat that our views are as at yesterday. This is such a fast-changing situation, and as we were preparing over the weekend and towards the end of last week, the rules were changing by the day. The big recent changes were last Wednesday, the Treasury direction was issued, and then the employer and employee guidance was updated last Friday and also yesterday, and there were some additional bits of guidance to help employers calculate the 80% and how to apply. So this is as at yesterday, and obviously it's important that everyone keeps on top of the updates as they come thick and fast. So in terms of the objective of the scheme, in very simple terms, the point of the scheme is to avoid redundancies by the government stepping in and paying 80% of people's salary, capped at £2,500 per month. So the point is to enable businesses that have been affected by the virus and the impact to essentially press pause on their staff costs to help them get through the crisis. An important clarification came out towards the end of last week that employees don't need to be at risk of redundancy in order to be furloughed. So this was something that, as the scheme was coming out, was I think an understanding that that might be the case. The Treasury direction that was issued last Wednesday confirmed that that's not the case. That to qualify, an employee needs to be placed on furlough, quote, by reason of circumstances arising as a result of coronavirus. So it's a wide definition. It can include many different types of situations, not just potential redundancies. It could cover, for example, employees not wanting to come to work because of health and safety reasons. So it's a wide definition, and I think the point of the scheme is intended to be wide. It's intended to step in and help the public in the face of a potential economic collapse. So the net is wide, but as Shilpen's going to note now, it's not intended to plug every gap, and there are parameters.
Thanks, Paul. Absolutely. I mean, taking a practical sort of look at the scheme. As I said at the beginning, it's been put together in relative haste. It is ultimately intended to provide support to businesses. It's not intended to pick up the tab for businesses, and it also ultimately isn't there to help businesses that were teetering on the edge anyway. So it is a very wide-ranging scheme. And as Paul has said, it's really, I mean, although it's been clarified literally in the last week that redundancies are not a precondition, or imminent redundancies are not a precondition of the scheme, the very purpose of it, everything about it, basically, and if in doubt, the thing to bear in mind when you're working with the scheme is it's there to stave off redundancies. Because if it wasn't there, if the safety net hadn't been put in place very quickly, there is no doubt, and I haven't had a single business commentator suggest otherwise, that we would have seen mass redundancies on a scale that we've never seen before, certainly in the modern era. And in many respects, it meant the government had no choice. And that's why this compares in many ways to what most of the countries of the world, especially most of the Western nations, have been doing, which is to focus very much on the workforces and keeping them sort of intact as much as they can. The scheme itself, as Paul has touched on, is wide open. It's very wide, and it encapsulates almost every variety of employee, basically, including part-time workers, 0 hours workers. The test really as to whether your employees or whether you personally qualify is the practical test is really PAYE, basically. If you're on a payroll as at the 19th of March 2020, you should qualify for this scheme, basically, one way or the other. And that's why it goes back to the point I was making at the very start before we began, that the intention is this is relatively simple and should be something that can be administered and applied for without too much red tape or even without professional input, which of course will make a big difference for small businesses. The application is made by way of the government portal. There's only one way to apply, and that portal went live yesterday, as I've mentioned. And the scheme was initially set up to last for 3 months from the 1st of March, but it was extended last week by an additional month. So we are now looking at the scheme lasting until the end of June. Paul, you mentioned the question of whether the government tries to start paring this back. I've got to say, I think personally the genie's out of the bottle now, basically. And unless and until we return to some kind of normality, I suppose you could see a staged sort of paring back of the scheme. But this scheme in particular, I think, is going to be the life support system that the economy relies on for the rest of this year, if you ask me. Now, one other practical point is this scheme is actually largely administered on trust. Again, partly going back to how it was put together so quickly, but also just because they're very keen to get payments out, and they have to give employers the benefit of the doubt, because if they get caught up in too much red tape or too much investigation, this will just never happen. And even now we're looking at, we're 9 days away from the end of the month. How many businesses will survive if there's delays in the payments coming through, if they can't make payroll at the end of April? Having said that, what's very important to bear in mind is, as you'd expect from HMRC, any claims based on dishonest or inaccurate information will be blocked or recouped. There is a whistleblowing line that's been set up specially it's a dedicated whistleblowing line, so that anyone who becomes aware of any abuse of this system can report that for investigation. So as much as it is intended to be a trust-based grant scheme, do bear in mind that, as always, there are strings, and this is not a license to print money. Over to you, Paul.
Thank you, Shilpen. So I think, as you said, I think I agree with that, Shilpen. It's you know, the thing's designed to be inclusive rather than exclusive. And when you look at the issue of who's covered, the qualifying criteria, it's straightforward. And as you say, the purpose of this is that you're meant to be able to go onto the portal and make your application yourself without assistance. They've put more people on the HMRC helpline, but basically I've not heard of anyone trying to get through, but I would imagine that's going to be pretty difficult. So it's meant to be easy and straightforward to use. The Treasury direction and the guidance has got full details of eligibility, but the headline points are essentially for employers. You need to have a PAYE payroll as at the 19th of March. You need to have enrolled for PAYE online, and you need to have a UK bank account. And so this can cover businesses, charities, recruitment agencies, public authorities. For employees, the sticky issue of employment status has been completely bypassed, as it needs to be. And essentially, as Shilpen said, the key point is whether you're on PAYE. So it can include employees, it can include workers, people like agency workers, 0 hours workers, office holders, what's called Lim B holders, Lim B workers. They're all included as long as they are on PAYE. The cut-off point has been pushed back to the 19th of March. So previously, this was the 28th of February. It's now been pushed back to the 19th of March. But the important thing is this, is that you don't just have to be on the PAYE at the 19th of March. You have to have been paid on or before the 19th of March. It's referred to as an RTI notification. So what this means is that if you started a new job on the 1st of March, but you're not due to be paid, or you haven't been paid until, say, the 27th of March, then you're not going to be covered by this. The salary has to be paid on or before the 19th of March. If you have recently changed jobs, then one option is that if you've left your previous employer's payroll as at the 28th of, sorry, if you were on your previous employer's payroll on the 28th of February, but then following that you were dismissed for any reason, or you resigned, so it doesn't have to be coronavirus related, then you can be re-engaged by your previous employer, and then they can furlough you, obviously, as long as they agree. So it's a little bit of a help there for people that have been, recently moving jobs. So Shilpen's now going to talk to you about the employer perspective.
Thanks, Paul. Yes, I mean, really over here, what I'm going to try and look at is a few practical points. What are some if not need to knows, then good to knows about the scheme from an employer's perspective? Because from my point of view, I mean, the CJRS is potentially a lifeline for business. You know, if the government gets this right, it, as I said a few minutes ago, will become the life support system for the economy in the coming months. And it's something that I would strongly encourage, and I have been strongly encouraging clients to take up if they can. But at the same time, what's very important to bear in mind is, as easy as it is to put your application in, or to appear to qualify, you have to be careful you don't disqualify yourself by the way you make your decisions, basically. So it's intended to be straightforward, but you could very easily get it wrong, at which point you're still facing the cost of your employees, basically. But you will not be able to recover the 80% that you're due, or the capped at £2,500 that you're due from the government. So do not get this wrong, please. The first thing is to bear in mind, this is rightly or wrongly a binary scheme. You are either, an employee is either on furlough or not on furlough. And the importance of that is that they cannot work for you during the period that they're actually on furlough. There's a lot of different views on this. I have a strong view about this. I think that's actually very counterproductive. I don't understand why it's necessary to have such a black and white scenario when businesses, and especially small businesses with limited resources, need to rely on their employees, even if it means they can do a bit of support from home, or whatever. But in this day and age, when you can work remotely, it's very difficult to understand why this was strictly necessary. But as an aside to that, furloughed employees can do voluntary work, and they can also work for other employers whilst on furlough. And they can also they can undertake training as well during that period. You can stay in contact with them, but it's very important not to cross the line to make them do any work. There's a growing lobbying movement to try and get the government to change this. I'm involved in one myself. And I'm hoping that we will see change on this, because this concession, I think, is essential. How are businesses to recover and to ease their way back if they don't have the flexibility to have employees working even on a part-time basis during this period? The scheme will pay up to 80% of salary, up to £2,500 of wage costs, as Paul has explained. Something to bear in mind there is that it also can include commission payments, it can include overtime. But the key to this is it's got to be non-discretionary entitlements. I mean, essentially, if it's a contractual entitlement, that is something that you can claim for. If it is a completely, for example, a discretionary bonus, you can't claim for that. And I'm afraid it won't be part of your company's furlough application for affected employees. The test in many ways is looking at their contracts, basically, and seeing what the contract provides for. I was advising a national estate agency last week, and they had a big group of employees who are literally paid on delivery of projects. And for them, they do qualify for the furlough scheme because their contract makes it clear that if you deliver no projects, you get paid nothing. But if you deliver projects, you get paid X amount for every single project you deliver. But had that been a we'll pay you as and when we like, as and when we're impressed with your work, that's discretionary and you wouldn't qualify. Having made a lot of noise about how there is so little flexibility, one important thing to bear in mind is there was a minimum 3-week period for the furlough scheme. That does present some opportunity for flexibility, because you do have the opportunity to do what I call roll on and roll off. Basically, you can vary your furlough scheme, and you can mix it up with your employees, so that you have some that are on furlough, some that are off furlough, etc. And you can rotate that basically if it helps your workflow and your resourcing of staff, and also potentially your morale. Your staff probably want to be involved. There'll be some who'll be happy to put their feet up, but there'll be many, I hope, majority, who prefer to be involved. And for them to be involved on an on-off basis, I think, is a good way to keep your staff, so to keep cohesion and to keep your staff connected with the business. As Paul has said, and I'm going to repeat it because it's very important, redundancy is not a precondition for the scheme, which is interesting because most employment lawyers spend a lot of energy on this basically for the first few weeks when our clients were taking this on. But I think it's good that it's been loosened. At the same time, it's still important to bear in mind that the backdrop to all of this is saving jobs, basically. So you should not be using this as a free lunch, basically, or just a way to recover money from the government. A very important thing to bear in mind here is that the scheme does not supplant or negate existing employment law. It's very tempting to think, well, this, especially when we're in the eye of the storm right now, that all that matters is to qualify for the scheme and everything else will be okay. But the truth of it is, and most employment lawyers will tell you, that we're already looking out for where the problems will begin when the recovery begins, basically, because a lot of slapdash decision making has been taking place, of course, through necessity. But the fact that a lot of corners are being cut will potentially lead to problems. And I think it's worth highlighting that when you do select who goes on furlough, do it in an appropriate, non-discriminatory fashion. Make sure, I would suggest, that you have at least an explanation available if you're ever asked about it, whether it's by HMRC or whether you're ever challenged by employees who think that it's somehow a negative point against them, as to what the business rationale is for why you've selected certain sectors of your business or certain staff to be furloughed. But to highlight, all rights are intact. So statutory sick pay, maternity and other parental rights, rights against unfair dismissal, and redundancy payments are all intact. So do not take this as a light option or as a way to ignore the rights that your employees have and your obligations as an employer. Another thing that's important is that the government, again, has loosened the requirements for qualifying for the scheme now. So All that's required really is for this to be documented in writing, that an employee and employees are being placed on furlough. But going back to the point I just made a few moments ago, employment law is intact still, and I think you'll struggle to find a single employment lawyer that encourages a simple, just send an email out and don't worry about it approach to furlough. Consent is important, because if you have consent, it means they're agreeing to any changes that go with that. And I would say that it's very important to bear in mind the underlying employment contract. So again, if the employee agrees to a variation of their employment contract, you're doing it in a way that's by agreement and also documented as being such. And that doesn't mean you have to rewrite a fancy new contract. It just means you need to make sure that the employee confirms their consent as a best practice point. So you don't just leave it out in the ether with them never having agreed to do it, basically. So my recommendation would be, even though the government has limited the redundancy sort of requirement and the formalities around this, try as a best practice to document this with demonstrable consent from your affected employees. Paul, over to you from the employee perspective.
Thanks, Shilpen. So from the employee perspective, well, unfortunately, I don't think the employees are really in the strongest position. And I think that the options on the table for many, many people over the last few weeks has been basically, you accept furlough and a 20% pay cut, or, you and your colleagues are at risk of redundancy. But that said, I think I've picked out sort of 3 points here, which I think would be important for employees to bear in mind. The first one is that you can ask to be furloughed, but you don't have a right to be furloughed. Ultimately, the decision is down to the employer. So, for many people, they've got entirely, legitimate and understandable reasons to want to be furloughed because, they've got childcare responsibilities at home. And by all means, you can ask, but the reality is that as long as the employer isn't selecting on a discriminatory basis, then it's really down to them, who they select to fit in with their needs of the business. The second point, and we've spoken about this before, but the point is to avoid redundancies, and we keep saying that's really the purpose of the scheme. So if you're an employee and you've been placed at risk of redundancy by your employer, then you should be raising during consultation furlough as an alternative to redundancy. Now, the question about whether you can actually fairly dismiss an employee for redundancy whilst this scheme is in place is uncertain. I think arguably in some circumstances, maybe you could. It will obviously depend upon that situation. But certainly it's something that employees should be raising to say, look, as an alternative to making me compulsory redundant, can you put me on furlough? And the employer would need to engage with that and, demonstrate why that wasn't appropriate if that's their view. Obviously, if you have been made redundant between the 28th of Feb and the 19th of March, then you can go back to your previous employer and the rules have changed, so they may not be aware of it, but you can ask them to re-engage you and then to furlough you. The third point is, if you're a company director, you need to be aware of what you can and can't do, because the Treasury direction issued last Wednesday is different from the previous guidance. So the Treasury direction, which is what I would go on, says that you can only do work to fulfill a legal obligation to file company accounts or provide other information relating to the administration of the company. So it's very, very wide. And you come back to this inflexibility point. This is not so much of an issue if you're a large company with many directors on the board, but if you're an SME, then this is going to cause a real problem, because you may not have enough work to be able to afford to pay directors' salary, so you need to furlough. But equally, a director needs to be, getting on with the work that they have got, and also making plans on how they're going to get out of this and how they're going to deal with this when the lockdown situation ends. So it's a very, very tricky situation for a lot of businesses, and you just need to be aware that yes, there are a lot of cases and there's going to be a lot of applications, but HMRC do have the ability to audit. They've got the ability to claw back. You've got to keep your records for 5 years, which suggests that there could be a 5-year period in which they can look into this. And as Shilpen mentioned, there is a whistleblowing helpline. So It's a really difficult situation, I think, for a lot of SME businesses.
Mm.
So Shilpen now is going to talk to you about how you apply on the portal, which went live yesterday.
Yes, thanks, Paul. I mean, the portal, as I mentioned earlier, it looks like it's working. There's been no catastrophic reports of a disastrous start or a crash, which is something to be cautiously optimistic about. The procedure itself is relatively straightforward, and the government website will guide you through what you need and the information you need before making the application. So you need to have that to hand. First and foremost, though, it's essential that you are registered for PAYE online. I suppose there may be employers out there that are registered for PAYE but not registered online. And if that's the case, I think you need to have there's a particular gateway code that you have to have. So do check that you have that available. If not, register for that quickly, I would suggest. You'll need, as you'd imagine, your UK bank account number and sort code for being the account you want your payment to come into. Your employer PAYE scheme reference number, the start date and end date of the claim, bearing in mind that it can be backdated to the 1st of March for those who qualify. And the full amount you're claiming for, including employer national insurance contributions and employer minimum pension contributions, because only the minimum contributions will be covered by the scheme, by the way. You'll also need your corporation tax unique taxpayer reference, that's the UTR, or your company registration number. So do make sure you've got that to hand. I haven't tried the portal myself, but I have a feeling it's one of these which will time out. So if you don't have everything available, you're going to be going back to the start of the queue again, basically. So do have that information available. It's worth noting that the government thinks that it can deliver payments within 6 working days. And that is essential for those who apply quickly, because it may mean that payments start to trickle through in time for month end. And I think that's essential for a lot of businesses that are really struggling right now. But that does mean the sooner you can get your application in, the better. I think there is a procedure whereby, I think it's, if you're applying for over 100 employees, you can do it by way of uploading a spreadsheet. But the bad news is, if you're doing it for less than 100 employees, I think you've actually got to painstakingly put through each application individually, which is perhaps not so user-friendly as it could have been. Important to note, just as an aside, that it's estimated that 2/3 of companies in this country are going to use, or employers are going to make use of this scheme, which is why it's so important. And if the government gets it right, it's going to have a massive impact. And if the government gets it wrong, it's going to have a massive impact, but in completely the wrong direction. So the margin of error is very small. And I would say, do get your paperwork organized and make sure that you've done your thinking on this. As I say, and I've said it a few times now, the actual procedure is not very complicated, but just make sure you know, and you've got to, I would say, have a separate file, have your furlough records, make sure they're available if you're ever audited, just so you don't have a scenario where you might get paid today, but have a clawback in a few months or even a few years' time. That would just be completely counterproductive. So Paul's now going to take a look at where we think there's some scope for improvement in the scheme.
Thanks, Shilpen. So, understandably, the scheme isn't perfect. I mean, when you think, the government's had to put in place a whole new entire legal framework for this scheme and also sort out the operation in basically a month. So, there are so many different ways in which this coronavirus pandemic is affecting businesses. So I'm on the ground, there's going to be many, many ways in which people think that this can be improved. But I've picked out what I'm coming across as the 3, I would say the most common issues that I've been speaking to clients about. The first one, we've already touched on this, it's the inflexibility issue. It's the fact that it's all or nothing. If you're on furlough, you can't work. And as we've said, it's a problem for SMEs, it's a problem for businesses, because you want to be able to, respond to queries. The world hasn't shut down, stuff's still going on, people are still communicating. You want to plan for what's going on afterwards. I mean, we're going to talk about the self-employment scheme next, but under the self-employment scheme, you can still work. And I think that's something that certainly the government should be looking at. The second issue is, whilst they have extended the scheme to capture people that started on or before the 19th of March, it was previously the 28th of February, there's still going to be, I think, a lot of people that are going to miss out, because you may have started after the 19th of March, or you may have started in March, but you haven't been paid by the 19th of March. The reason why they've done that is that the scheme was introduced on the 20th of March, so they want to stop fraudulent claims. But nevertheless, many people will be left out by that cut-off point. The third point is there's still lack of clarity on certain issues. So if you've been furloughing employees, or if you've been advising on this, you'd have seen the common theme over the last few weeks has just been trying to understand this scheme as the rules change and the guidance evolves. We do have confirmation on a lot of points, but there is still some unanswered questions, and I've picked out what I think are the three main points. The first one is, do you need a written agreement? Now, up to last Wednesday, the guidance said that you just need to give written notification, and that's what people in a lot of cases were doing, particularly if they weren't going to reduce people's pay. The Treasury direction was issued last Wednesday, and it said that you needed written agreement, which caused panic. And I had one HR director who furloughed 1,000 employees on the phone, sort of having a mini breakdown in his garden because he didn't think that he'd got his employees to agree, and it turned out, fortunately, that they had done it by agreement. But I think in response to that kind of panic on Friday, the government issued further guidance, which is a bit confused, but it basically says you need to confirm in writing, but you don't need a written response from the employee. So it appears that verbal acceptance is okay. Now, do you go with the direction, or do you go with the guidance? In very simple terms, legally, the Treasury direction should take precedence. But in reality, HMRC are probably likely to follow the guidance that they've been issuing over the last few months, because there's been an expectation from people that those are the rules that you need to follow. So I think Shilpen is right. I think, practically speaking, the best advice is to get written agreement. And you can do this retrospectively. So if you haven't got it in place now, you can go back and get that sorted. But if it's not possible, for example, because you've just furloughed so many employees, or you can't get through to people, or you can't get a response from people, then I think if you have something in writing, you probably should be okay. But yeah, best advice would be to get something, an agreement in writing.
Just to add to that, Paul,
Yeah.
a practical observation is this doesn't mean that you have to have something inked out, basically. It can be an exchange of emails, basically, where you just ask your employees to confirm they're agreeable to what's been proposed.
Yes.
Just the practical pointer. So don't feel as if you've got to get a contract drawn up or anything formal. Even an email exchange should be enough to signify their consent.
Yeah. And going on the basis of the guidance, it does say that verbal communication from the employees is okay. I guess if you are doing it that way, if it's a phone call, then just make a note of it. Anything you can do to evidence that, the more the better. The next point is holidays. So this has obviously been a bit of a vexed question over the last month. Can you take holiday whilst you're on furlough? Well, the guidance that was issued on Friday confirmed that you can. In terms of your pay, it just says that you've got to be paid in accordance with the working time regulations. So if you've had to work out holiday pay under the working time regs, you know that there's a calculation with reference to whether you're working normal hours or not. It's not entirely clear at the moment, but it's likely that if you work normal working hours, then your holiday pay will be based upon your pre-furlough pay, so your 100% rate of pay if it's been reduced. If you don't work normal working hours, then from the 6th of April, that will be an average of the last 52 weeks, and it's likely that the weeks on furlough will be taken into account, but because you're going back so far, you still will be paid more than if you're on, for example, 80% pay. The wording of the guidance is not entirely clear as to whether you can require employees to take holidays, but I've read quite a bit of sort of commentary saying that it's likely that you can require staff to take holidays. But this is all subject to one unanswered question, which is, under the working time regulations, meeting their definition of a holiday, can you take holiday during a lockdown? So the point here is that a holiday is meant to involve rest and relaxation, and to what extent can you do that if you can't leave the house, or you haven't got a garden, for example? So that's still unanswered. I think the reality is that's probably not going to be decided by government guidance. I think that question will probably come down to litigation in the future, which is obviously not very useful for businesses that are having to make decisions now. The final point wasn't even really an issue until the end of last week, but this is the question about whether you can furlough sick employees or employees that are shielding. The short answer is that the guidance and the Treasury direction directly contradict on this. The guidance says that you can furlough staff, and it still says that you can furlough staff if they're on sick leave or they're shielding. And shielding staff from last Thursday are now entitled to SSP. The Treasury direction, which was issued last Wednesday, says that you can't place someone on furlough leave if they are entitled to SSP. So not even that they're receiving SSP, but that they're entitled to SSP. So that means that if you're on sick leave or you're shielding and you're entitled to SSP, at that point, you can't be placed on furlough leave. So it's a direct contradiction, and there's been a lot of talk online about what this may or may not mean. The bottom line is, I think until the guidance or until the government kind of clarify this point, our advice would be that you follow the direction. The direction says that you can't place anyone who's currently entitled to SSP on furlough. What I would note, final point on this, is that if you're talking about employees that are shielding and that you furloughed prior to the 16th of April, this issue isn't going to apply, because shielding employees only became entitled to SSP on the 16th of April. So therefore, this rule that you can't place someone who's entitled to SSP on furlough will not apply to shielding employees before then. That's the current understanding. That's not definitive, but that's the current understanding. So those are the kind of key areas I think that we can look at to say where this scheme needs to be improved. I think, Shilpen, should we now move on to the self-employed scheme?
Yes, absolutely, absolutely. I mean, it's going to be interesting to see, isn't it, Paula? If the government fine-tunes its the CJRS in the coming weeks and months, because there are undoubtedly some quite important gaps here.
I think so, and I think if you look at the example of this written agreement, you just wonder. On the one hand, you're thinking, well, there's sort of there's no doubt top lawyers and top people at the revenue that are producing this documentation, this guidance. Mm-hmm. But the Treasury direction comes out and says for the first time that you need to have a written agreement, which is not what it said beforehand. So you think, well, maybe they're trying to narrow it. But then 2 days later, they issue guidance that kind of waters that down. So I do think that they will want ultimately to try to include as many people as possible and not try to sort of, restrict it on a technical basis. But yeah, at the moment, we don't know. It's still evolving.
Yeah, I think there will be a good degree of tolerance for changes and variation on these things. Yeah. But we just can't be certain, and that's why the paper trail is so important, I think.
Yeah.
Well, we're now going to move to the government's response to the self-employed sector, which followed up very much in the wake of the job retention scheme, and it was also delivered a little later as well. So there was a lot of worry and fear, basically, from the self-employed sector, which, interestingly enough, has grown dramatically. I mean, the gig economy doubled in size from 2016 to 2019, and continues to grow, or at least did until everything came to a standstill last month. So much so that we have, I think it's, surveys suggest 4.7 million self-employed workers in the country as of last year. That's a big sector of the working economy, which the government has actively encouraged and developed over the last decade or so. One thing I should also mention, just again as a reminder, really, is that, of course, all of our views today are effective as of today's date, and I say that. I mean, other than stating the obvious, I say that because these things change quite a lot. So, do bear in mind that we are working with, a fairly moving sort of scenario. And that the views we're expressing are valid as at today's date, the 21st of April, 2020. Going back to self-employed employees and the importance of them, I mean, the dynamics of the workplace have changed dramatically in the last 10 to 20 years. And it was a great shame, and it was a real worry to see that the government seemed primarily and initially focused only on employees. And it was a real relief for a big chunk of the economy, and for those of us advising employees and this middle sector, to see that there was something that's there. It's not perfect, as we'll see, but it's still a pretty robust answer, I think. The scheme will allow you to claim a taxable grant worth 80%, up to 80% of your trading profits, up to a maximum of £2,500 a month. It's available for 3 months for now, but may be extended. I mean, I've tried to see if this was extended in the same way as the job retention scheme was extended, but unless Paul or anyone can correct me, I don't think this actually has been extended, which I think is an anomaly. It's a very bizarre thing. But it goes to show that the government is very focused on employees first and foremost, really, in the classical sense. Paul, you look like you're about to say something.
Yeah, no, at the moment it hasn't been extended, but my thoughts on it is that they seem to be dealing with these things sequentially, don't they? So I think they focus on one thing, they focus on the employee scheme, then they turn to this, and this has always lagged behind. So I would expect it to be extended to June, but yes, nothing's been confirmed yet.
You very much hope so, you know. But bearing in mind the next point I'm about to make, which is this scheme has not been tested yet. So the same sort of lack of clarity that we were experiencing with the job retention scheme, 2 weeks ago, even a week ago, very much prevails here. There is minimal guidance here. I think, Paul, you're spot on when you say that it's because the government simply hasn't turned to this yet. So once it's bedded down the job retention scheme and the portal, I think it will turn to this, and we'll have announcements about this and the practicalities soon. But what's important to note here is that the government at the moment is telling us, and the guidance we're getting is that eligible businesses and individuals will be contacted by HMRC by the middle of May to tell you that you're eligible, which I mean, the scope for error there is immense, if you ask me. But and then they will then aim to make payments by early June 2020. So there will be, apparently, once they contact you, there'll be a process by which they will allow you to apply. Until then, you may well ask, what are people to do? And I think the answer is survive on, there are business support schemes by way of tax credits that are available. VAT has been deferred for a quarter, as I'm sure you're aware. There are enhanced universal credit options available as well for those really in need. And of course, there's the extremely elusive business loans, if you can, if anyone can secure one. But in theory, that they're available as well, and something to be considered. Paul is now going to talk to you about the kind of the practical scheme in a bit more detail.
Thanks, Shilpen. Yeah, so the self-employment income support scheme. So the headlines, as Shilpen said, is that you get a grant, so you don't need to pay it back. You get a grant of your trading profits capped at £2,500 per month. And at the moment, it covers March, April, and May. But as Shilpen said, it may well be extended, like the furlough scheme was. It's designed to replicate the assistance that people on PAYE got, but obviously it's much more complicated to work out how self-employed people, what they earn. Do you take it on turnover? Do you take it on profit? Do you include dividends? So the parameters of the scheme are to a certain extent arbitrary, but I think, in the practical sense, the government's kind of got to draw the line somewhere. And, the purpose of this scheme, really, it's to assist. It's not to replace your income. It's to assist you if you're self-employed through this time. But the net effect of that is that on a much larger scale than with the employee scheme, many self-employed people have been left out by this. So, for example, if you're a director, or if you're self-employed but you operate through your own limited company, then you're not covered by this scheme, and you have to claim under the PAYE scheme if you pay yourself a salary, which is probably going to be, the basic minimum. So, and that's just one example. Many people have been left out. So, Shilpen, are you going to talk about now who's covered by the scheme?
Yes, absolutely. And this is an area where, this really just follows on exactly from the point you've just been making, Paul, which is it's intended to help as broadly as it can, but there's a lot of people falling through the cracks in this particular space. I think even more so because the whole purpose of this self-employed freelancer gig economy space is flexibility, but that makes it much harder for the government to trace and track payments and earnings, basically. So I have a degree of sympathy, but at the same time, there are more gaps to be plugged here, I think, than perhaps in the CJRS scheme. So in order to qualify, you've got to be a self-employed individual or a member of a partnership. And you've got to have submitted your self-assessment tax return for the 2018 to 2019 year. We'll come back to that because it's an essential, it's a precondition to applying for the scheme. You've got to have traded in the last financial year, and you've got to be trading when you apply and intend to continue trading. In other words, you've got to be an ongoing business. I'm not sure quite why the guidance is so sort of broken down in that respect. But these are all the requirements that you'll have to be able to sort of meet. You also have to demonstrate that the business has been adversely affected by coronavirus. I think the vast majority of businesses will very easily pass that test, sadly. And HMRC will take a date. I mean, I'm not even sure what this means, Paul. I don't know if you've seen this guidance, but the HMRC, the government guidance says HMRC will, as usual, use a risk-based approach to compliance. I have no idea what that means. This is where there'll have to be guidance, one hopes. Because, you know, does that mean if they think you're high risk, but you comply, they won't approve you for qualification? It's an odd thing, basically. It's also important to bear in mind your trading profits must be no more than £50,000 and more than half of your total income for either the tax year 2018 to 2019. The average of the tax years 16 to 17, 17 to 18, and 2018 to 2019. Again, why is it so complicated? You wonder. But one hopes that this will all eventually settle down in terms of as it takes shape next month. But the really important practical point here, which I know Paul will be telling you as well, is that you must make sure your tax returns are up to date. Why is that? It's not because the government is trying to be unfair here. This, I would say in fairness, is because how is the government to know what you qualify for if it does not know what you earned? And it's very important in this sector to have that sort of visibility. So you must make sure returns are up to date. And very importantly, there was an extension that was granted by the government for your tax return for the 2018 to 2019 year to be submitted by the 23rd of April. So you've got 2 days to get that in if you haven't done it yet. Apparently, and this is again government guidance in the usual opaque, helpful way, is it says, on the one hand, we've got to cut off, if you don't put your returns in, you're done. But then it says, HMRC will review any late returns in the usual way. Now, again, I don't even know what that means. I won't hazard a guess. It suggests there may be penalties that apply and maybe you can qualify after the event. But my strong recommendation is do not fall at the first hurdle. If it means you've got to rush your returns through between now and Thursday, it's worth doing it. Just do it, please, is my practical recommendation. So Paul is now going to take you through some thoughts and some perspectives from a business perspective on this scheme.
Thanks, Shilpen. I think we've covered really most of the points about this now from the business perspective. I think the main thing to bear in mind is that unlike the employee scheme, if you're self-employed, you can keep working. So the condition is only that you've lost trade due to coronavirus. And I would imagine that, you know, most self-employed people have been adversely affected by this in some way. So so you can keep on working and still claim this grant. And then the other point, it's just a cash flow issue really, because you're not going to get the money until June. Well, that's what the government's aim is. So there may well be cash flow difficulties because that's a long time since we went into lockdown. But as Shilpen mentioned, you know, there may be other ways to free up cash. For example, if you've, you know, because you've got a deferral of your VAT or your self-assessment tax, so it could be used to keep yourself going, and then you reimburse that if and when you get your scheme grant. So I think, Shilpen, you're going to look at the freelancer perspective now. Shilpen's on mute. Hang on.
Oh, sorry, I'm on mute. Oh,
that's it.
You didn't really miss any important pearls of wisdom there, but I'll just make the point again, which was simply to say that in this particular space, the business perspective does overlap naturally with the perspective of the worker, simply because, of course, more often than not, you're one and the same, basically. I would suggest as a practical point to freelancers and to those in this gig economy self-employed space, plan ahead. It sounds very obvious, very trite to say that, but bear in mind and do not overlook the fact that the earliest payments will not materialize until June. So you do have to survive. Even for those who qualify, you do have to survive until June. And let's not forget, it's a bit of a waiting game. You're waiting to be told by HMRC if they think you qualify, and then there may be a discussion to be had if you never hear from them. So, I mean, the mind boggles in terms of how the system has been set up. So there is scope for errors and for delay. So prepare as much as you can. As Paul has mentioned, and this is essential here, is you can continue to work, which is very different to the CJRS scheme. And I think a very good thing, because it at least means that for those who can still function in the pandemic, they are able to whilst applying for this support. I think Paul has again touched on this already, which is the grant will be subject to income tax and national insurance contributions, but it does not need to be repaid. So it is a real grant, even though it is taxable. And a final practical point I would say over here is query if you actually are a freelancer, because a lot of freelancers and a lot of self-employed people might think of them as being themselves as being that way because they've got flexibility. But remember what we pointed out earlier on about the job retention scheme, the employee side of things, is the only real test is if you're on PAYE. So even if you are your own boss, even if you decide how much you work, even if you decide if your pay is based on delivery of services that you see fit to deliver, if you are a PAYE worker, then you are probably, in fact, possibly only suited to the other scheme and not this one, which in many respects is simpler for all the reasons we've covered already. So Paul, I think you're going to deal with, I wish you luck with this one, how to apply.
How to apply. Shilpen, I'm just looking at the time as well. So it's almost 11 o'clock now. I think we're probably going to wrap up in the next 5 minutes.
Yes.
And then I think we've got some time afterwards for questions. So I guess probably we'd have another, 10 or 15 minutes for any questions after that?
I think that's about right, yes. Helen, I think we discussed running until 11:15 if there were questions.
Yeah, okay, cool. Yeah, so sorry.
Sorry, we have overrun slightly. I'll be quick as well.
Yeah. So, well, I mean, in terms of how to apply, it's actually, at the moment, on the guidance we've got, quite straightforward, because you don't need to do anything other than get your tax return for 18 and 19 in by this Thursday. If you do that and you qualify, the revenue will contact you in mid-May. The guidance, I think, will be published a bit nearer to the time. When you apply, it will be for a lump sum, and that lump sum will cover March, April and May, assuming that it's not extended until June in the meantime. And as we said, the payments are due to be paid by the revenue in June. So finally, Shilpen is going to look at room for improvement with the self-employed scheme.
I'll keep it very brief just by sharing one stat that I think really kind of highlights where the gaps are, rather than repeating some of the stuff that's already been said. The Institute for Fiscal Studies has recently estimated that 1.3 million people within the economy will not benefit from the scheme at all. That's because they either received less than half, sorry, excuse me, there's something came up on my screen. They've either received less than half of their income from self-employment, or their profits have exceeded £50,000 per annum, or they've started their business after April 2019. These are all reasons where, or scenarios where people will fall between the cracks.